Wayne's World.
Happy Wednesday, everybody. Welcome to Season 1, Episode 14. Stratton Mortgage here again. We'll start off with introductions. I'm Tom Christie.
Bill Seach.
Trey Reedy.
Adam Baumline.
We missed our podcast last week. We were out entertaining some people out at the Muirfield tournament, so we apologize for that.
Lots of fun.
It was really fun, though.
It was a fun tournament. I'm sure most people around Columbus have at some point in time ventured out there to that course, which Sunday Tiger went off. That was very...
Yeah, he's...
Those crowds get crazy around him.
Those crowds are nuts when he plays. It's insane.
It seems like everybody follows him, though. Like, instead of like the leaders, you know what I mean? It's kind of weird.
Tiger effect, man.
Sunday there was a wave. I mean, you could watch him move from...
See it coming from one hole to the next.
You went there, too?
Was there Sunday?
Yeah.
He had a picture of... Whose flop shot was that? Remember? You were right there on 18.
That was Tiger.
Yeah, it was Tiger.
Yeah.
So Tiger
was right by the
green.
Right by the ADA sitting area. And
Yeah.
they had to move the lines, and people in their wheelchairs and stuff had to back up. And
Nice.
Yeah.
That's awesome.
Giddy up.
It's fun.
Yeah, that's pretty sweet.
Did you get a golf ball?
No.
I'm just kidding. I'm just kidding. Little Bill got one from Tommy Armour when he was little. He was standing on
Nice.
15, yeah.
Nice. Yeah.
Little Bill's our producer. He's over there. So
You can't see him.
So I think there's some hot topics that probably most people listening to this have probably seen on TV. The treasury market, which is how interest rates are derived each morning for us on the wholesale side, have dropped significantly. So it's created a lot of opportunity, not just for home buying, but just people who have been bought a home, 1-2 years ago, even with an opportunity to start leveraging that asset into shorter terms. So, and I don't think any of us saw a treasury market pullback like this, especially coming into buying season. This has caught us all off guard in a great way for sure.
do you think that's a trickle? I don't know why that's happening. Is it because of the China trade thing going on?
I was trying to watch that Barry Habib and the MBS Highway thing, but he's calling like recession next year.
Yeah.
So he's saying he's like bold prediction, like all in rates are coming down.
Yeah.
Really?
Yeah, which is, I mean,
there's an article talking about Feds actually all this time talking about they might raise rates, and they did in 2019. Which when the Feds raise rates, just so people know, that does not affect your 30-year fixed rate mortgage directly. That affects like home equity lines, car loans, credit card rates, things like that. So when Feds raise rates, they do that per quarter, what's signaling a strong economy. But now they were supposed to be raising them 4 more times this year, put a halt to it in the second quarter. Now all of a sudden they're considering bringing them back. And to your guys' point, those trade tariffs, there's a lot of uncertainty there. And I think another article I read too, China's now reinvesting back in the more people that buy the treasury markets is what drives that down. Because it's a safer haven than it is to be in the stock market. There's more risk with your money gambling in the stock market than there is a treasury market, which is mortgage-backed securities, that 10-year treasury. So it's been a great opportunity for people looking to refinance. Myself, I've had 3 people call me just in the last week and a half, looking to shorten their terms and or just decrease their monthly payments.
it's a good time to do that, especially because there's so many.
Even if you just bought your house,
3-5% down,
right?
Yeah.
You just did one last week, right?
Yeah, just to really kind of piggyback on that, again, your home that you buy is an asset. It's not a car. It's it's not a depreciating asset. This is something that's just like buying a stock. It's going to actually even better if you look at statistics. But a gentleman I just helped buy a house 1 year ago in Dublin, closed his loan on June 18th, 2018. Just closed his refinance. That was May 31st, 2019. Not even a full year into his house. And when he signed on that dotted line, it was the equivalent of him making 48 payments. He went from what was 29 years left down to a 25-year fixed. His payment decreased by, I think it was like $10 or $20 a month.
Wow.
So 48 less payments.
Is 4 years of payments is huge.
So exactly, and that's what we looked at that math, and he was able to see that same payment that he makes every single month is an egregious larger number going towards principal now than had he just been stuck with a 29-year fix. So
yeah, who wouldn't do that? Everybody would do
that.
that.
Crazy, right, man?
And I try to point out to people, when you sell your house, you pay realtor commissions, right? I mean, you're going to pay a realtor something to sell your house.
Title fees, property taxes.
Yeah. So when you go through and do that, if somebody was to basically come back and say, I'm going to sell my house in 5 years, and I'm going to go ahead and sell it to you for absolutely free, I mean, who would say no to that?
Right.
I mean, But by doing something like this, restructuring your asset is putting you in a position to do exactly that. And you may not see that cash in your hand right now today, but just like when you buy stocks, you're not seeing anything in your hand right then either. So this is this investment side of it. Everybody's different. Some cases, somebody needs to ease that cost of living, and they need a better savings per month, and that's just whatever your situation is. But I always like to look at the shorter term personally for myself, and I just at least try to present
if your
that to
payment's the same or lower, or even a little bit more, but you're talking saving tens of thousands of dollars in a 5-year period. I mean, that's a lot of money.
Yeah.
It's literally, like you said, literally just restructuring the way that you're paying money and restructuring the rate. I mean, why would you not? If somebody was to walk up to you and say, "Hey, in 5 years, I'm going to give you $50,000." All I need you to do is sign a couple of things there. Are you really? Who's going to say no?
Yeah, and
I mean, you would say yes to that all day.
And the process has become, with the good credit score people, obviously, but the process has become so simplified. Digital income, digital assets. It's like a, really a 15 to 20 minute thing at the beginning, and then you sign at the end.
It's really not that. You're. I mean, maybe if you'd have to wait, if you can get away with not getting an appraisal, if you have enough equity, that's the longest time. Really, the most. Probably frustrating if there's a frustrating part of it is
you just have to let them in.
Getting the appraisal, being home. But other than that, I mean,
and with his deal, we did that easy valuation, so it was way less money, right? So it was like, well, here's
a couple $100,
and so they go in and say, yep, we accept this value, or no, we're going to put together a report. So again, it's a very seamless, easy process. And what I find most people get fear of, and just talking to people and hearing is, well, I just don't want to add this cost to my loan. It's you can do it with no cost. It's one of two things. Do you want to skip a payment, or do you not? And when you look at the math, myself personally, I refinanced my first house 4 times, and I skipped a payment every single time. But in turn, that gave me a much bigger return when I sold my house.
Right.
I mean, it was like 30. I think I figured out over $30,000 I made more by me restructuring my asset. So he said, no, I was just sitting here telling you, like, here's what we could do. Here's what could happen. Like, this is things that we've personally done ourselves even.
I'm about to do for others. I'm about to refinance mine again.
I mean, it just
makes sense.
The 2 I'm doing right now, they're both skipping 2 payments. You know what I mean?
Yeah. In some cases, that's even.
Why not?
Exactly.
Right.
Like, it's the same thing too. Like people use credit cards and those interest rates are higher, but it's again, it's all in the math. And I said, don't let your house be a liability. Let it be an asset. Now's a chance to take a look at that. Again, either makes sense or it doesn't.
That's very true. Very true.
You got any special deals this month you're working on? Special meaning hard. Right.
Think about every one of them.
Well, just, like I said earlier, the parameters are tightening up a little bit on the one guy I was talking about with his running through desktop underwriter, and we've got assets, we've got, the 5% down. 711 score. It was really hard to get approved, and it still is. So,
that's a big change. Yeah, that tightening up is a big change for sure.
Yeah.
But your point with that right there is just try to even so somebody that was to work at a local bank or be working at one of these correspondent lenders that are just order takers, if you will, or basically salespeople that just talk to you on the phone, like they're gonna on paper that's a slam dunk, right? I mean, you look at that. Here's this score. Here's my debt ratio.
Yeah.
And without going through the process of really looking into the loan, they're gonna tell that other person you're good to go. Go ahead and buy a house, and they're gonna write up a pre-approval letter. That realtor and them are going to go out, and there could be multiple people involved in this. They're going to go through. They're not going to get it approved, and they're going to keep messing around with that thing. And you're not going to know what's going on behind the scenes, because they made a mistake, and now they're going to try to figure out a way to address that mistake with you. Now you just put yourself in a position because again, somebody just quickly looked at something on paper and didn't do their due diligence to try to figure it out. So I always try to at least. I really want people to understand what the difference is between a wholesale lender is and what we do versus those retail banks. And what you just said there is you personally working on this, getting it figured out.
Right.
Yeah, you got to run those findings, that's for sure.
Yeah.
Make a huge difference. And especially, think it's good to go on paper, but you run it through and you're like, oh, really? Wow, that's
interesting.
Or vice versa. You might be like, there's no way. I mean, I've got that deal right now. I was like, there's no way. And it ran proof eligible.
Right.
And then they added gift funds, and I'm like, oh, now it's definitely dead. Nope, proof eligible.
Wow.
So sometimes you just don't. I mean, you have to run those findings. You have to.
Yeah, especially the point you made earlier was a really good one. The all these several years, Fannie and Freddie Mac have been doing the conforming side of here's your 3% down loans, and letting us get away with higher debt ratios, without
Pretty
assets.
high too.
Yeah. And so people have been taking advantage of that. Well, I only have to put 3% down. I don't have to put 20 down. Let's do it. Well, now they're holding a lot of paper, like you just said, with 3% down, that have pressed some of those higher ratios than maybe what they would have liked to seen. So that the knee-jerk reaction to that is, Lord, tighten these wrenches down now, because now we got to make sure that no more of these 3% down deals are going to be more difficult to get in than maybe they were a year ago, or even in January for that matter, because it just changed in March.
Substantially different. Yeah,
So,
we've had ones even not just 3% down, just in general.
Yeah.
If it's an okay credit score, you know what I mean, but it's an okay credit score, but maybe the debt to income ratio is a little bit higher, or maybe they don't have 3-6 months reserves. We've seen people that 100% for sure would get an approval in January, and are not getting one now on a conventional loan.
Yeah,
so we've seen several of them, and we've even had loans. We've had loans fall out. We've had other realtors call us and say, "Hey, this home's back on the market. The financing fell through." And when you start talking to them, it's like, it's really not the lender's fault necessarily. It's just DU updated and the guidelines changed, and
they're making it tighter.
They're
and I think that's probably is pushing them back to FHA products. I mean, think about it. Because
we had one that we had to do that too. That's exactly what we did. It was great 700 credit score, and it was just barely over. Like that would normally in January that would have gone through conventional
all day.
Like it
all
definitely
day.
would have.
Yeah.
But once that ticked over that 45%, now they're triggering like, well, now we need additional assets just to be verified, and we just didn't have enough of those to get by on the conventional side. But again, back to why being with a wholesale person is better. Anywhere else, that deal would have died completely. Like they just wouldn't have been able to get it done. We were able to convert him over to FHA immediately and still close him quickly. Like 7 days.
Someone has thought about this, not necessarily wholesale or correspondent or retail lenders, but we've all been doing this for a pretty long period of time. We've all been through waves and this and that, and I think you can always see, there's always like gives and takes in mortgages. When they want to change something, if they feel like they have too much loss or whatever, they look at these numbers, they're always like adjusting the levers, so to speak.
It's just like was it episode 2 or 3 about banks,
how they're
stress
moving
tests.
rates. Stress test. Yeah, so it's always like, it's always changing. So even if you bought a home last year, let's say you bought a home last year on that program, and you are getting relocated and you got to buy another home, you could have the exact same scenario, and you might not qualify this year versus last year. I know Trey's got a scenario like that right now. Because of a derogatory credit. Literally, we have the findings from December?
It was September.
September. Except through Freddie. Couldn't run it through Fannie. Except through Freddie. Same exact, and I mean, everything's exactly the same. And I'm talking 800 credit score borrowers, 20% down, 20% debt to income ratio. Like, you would think this thing's all day long.
I'm going to write that pre-approval right now. Here you go, realtor.
And he came in office. He was like, what am I doing wrong? He's like, and I looked at it, and one thing changed. I'm like, well, this is what happened. So they updated something between then and now, and that's the change. So if you got somebody who's brand new, or maybe somebody who just doesn't realize that type of stuff, or is trying to like get as many pre-approvals in as they can, they're not paying attention, and they don't know. Like, there's a lot of things going on behind the scenes that even we don't control as loan officers, or mortgage brokers, that they're making adjustments, and they're always, and that's what's happening right now with the DU 10.3
and foreclosures and things like that not showing up on the credit report.
Yeah,
which
it makes a difference.
Yeah, and tax liens don't show up on credit reports either. So if somebody's making the payments to the IRS and they're self-employed, does it come out of their check? That's those things that sometimes unforeseen circumstances that you hope that other people might share with you, but sometimes they don't know any better either.
Be my well, it's not a deal anymore, but my deal of the week. They came in and wanted to buy an investment property. Again, 800 credit scores, 25% down, not a negative remark on the credit ever on there. Well, once we get them into underwriting, all the lenders have a back-end search tool that looks for derogatories and things like that. And it came, now she has a common name, but came up, hey, there's the, number one, there's these back taxes. Number two, there's this foreclosure. I said, okay, well, very, very common name. Back taxes weren't hers, no big deal. Call her up, and she's like, well, yeah, I did have the foreclosure, and she didn't tell it to me, and she answered the declaration question, no, I don't have,
In 7
I didn't have any
years.
foreclosures. Well, what happened was it started like 10 years ago. And it was,
yeah.
I don't know, apparently it was like, it could have been predatory lending or something.
Sale date.
And, but what happened was it took so long to transpire, the deed just transferred 2 years ago, finally out of her name.
That long?
Yeah.
Oh my, that's ridiculous.
Well-
So she didn't even have any paperwork because she's like, I shredded it all. I didn't have anything. And I'm like,
That's
there's nothing
ridiculous.
you can, like, you have no way to
take
prove
that long.
anything. Yeah.
Dude, I have a guy. Well, the girl's ex-husband's been living in the house for 4 years. I ain't made a payment, and Auckland didn't foreclose on him.
Yeah.
They send threatening letters, but they don't come and get the house.
I think this was
Not
some,
yet.
this must have been some
Right.
sort of, it had to have been some sort of predatory lending, because how would something, a foreclosure is definitely something you would think would be on credit. And
Absolutely.
it wasn't. It was not on her credit anywhere.
Wow.
So they must have, part of their quote unquote settlement or something, I'm guessing, but maybe they just said, hey, we'll just.
Well, no, it falls
we're not gonna-
off. It
yeah,
falls
we're
off
not
in
gonna
7
report-
years.
we're not
All
gonna
the bad
report
stuff.
this. Yeah, but technically it didn't finish until August of 16.
It's not even really the sale date. It's the transfer date.
That's when it transferred out of her name back
Right.
to, I think it was I can't remember, or maybe it was
Wow.
at the city or something, but I can't remember. But regardless, it was like, man,
Wonder how they found that.
this does back search tool.
Yeah,
it
there's
found
drive
it.
reports, and that's
Yeah.
Yeah, because mine it didn't show up in the credit report, nothing.
Yeah.
And then the lender,
That's what I was saying.
Did
It
a-
just happened to me. I mean, it happens.
kind of
There's
deep
explain this.
Yeah.
Yeah.
like, okay, they call drive reports, and like they
Or
that's
payment, drive. Yeah, there's
yeah,
no
they,
different ones,
those underwriters have direct access to those reports, which would be great for us to have. But,
No kidding, right?
Yeah. Well,
Hey, let's
so-
give a shout out to those people in Dayton, man. There's some houses that got really destroyed out there. You guys see that?
Yeah,
this is just terrible to see.
terrible. Yeah.
All my years living in Columbus, I've never had or heard or been witness to something that major of a tornado that close to home.
Right.
I mean, Dayton's just right down the street from us, I feel like.
Destroyed. My buddy
Not
went,
that far, yeah.
Tommy, my buddy, went out there to work on a place, and he said the Frito-Lay building, this half was standing and this half was gone.
That's crazy, man.
So,
Wow.
and all the houses right across the street totally flattened, so. And there'll probably be some relief stuff coming up for those people around the Dayton area. Because,
there already is.
Yeah.
Yeah.
The one when it happened to my sister's house in Houston, they let them not, like all the lenders said, you don't have to make your mortgage payment for 6 months,
Mhm.
and they didn't hit their credit for it or anything.
Which is good.
Which is
I
cool.
mean, yeah, they
Yeah.
should definitely do that. Yeah.
The humanitarian thing to do.
Yeah, definitely.
Yeah. So, shout out to those people.
Yeah. So I think it kind of a short episode today, but I just kind of in closing, with the season being where it is right now and rates just completely plummeting down the way they are. Again, if you're not talking to a wholesale lender, you need to have them as one of your options that you're looking into. Again,
Yeah.
just the service that you're going to get, the education that you're going to get, again, the biggest investment you're going to make. And time again, the people that we work with, when we spend 10 minutes on the phone, it's every person. I mean, that's the lady I'm helping close that I took from Fairway Lending. Spent on the phone with her for 10 minutes. She's like, I've talked to this guy for a week, and I just learned way more about what this all works, how things. I told her about his loan program, and just
Yeah.
that, because again, you're just a number in their cog in that place. And
Sure.
here you're going to get that service and that attention that you want and you need to get this thing
Well,
done.
plus with rate, if you think about this too, so rates are coming down. So now those higher rate lenders, they're offering the rates that we were offering 6 months ago.
Yeah.
that were lower now. So ours are even lower. So and we said this on several episodes, but in our market locally, property values are still increasing. So homes are getting more expensive. Okay, with guidelines getting tighter, homes getting more expensive. That literally that 0.25% interest rate could make the difference between somebody being approved and somebody not being approved.
And actually, a gentleman I was working with 2 months ago with the rates changing now does qualify for
Yeah.
that house that he's been the price range that he's been trying to get into
Sure.
because rates have dropped that much. So
Yeah,
again,
nice.
if somebody was looking around and they were like pressing that debt ratio back in March or April, like that, you might be there right now today with this drop in the market. I mean, that's a big difference in payment.
Yeah.
You're talking between, and then that adds up over time as well.
Sure.
Yeah. It's huge.
Cool. Well, that's all I got for today, guys. How about you?
I don't think. Other than that, we saw that thing about Home Ready changing that guideline
Yeah.
in terms of the income qualification. We'll get some more info on that, but we're part of some groups, either online or something like that, brokers around the country that actually we can touch on that. So we're licensed in Ohio and Colorado. Obviously Ohio is our here in Central Ohio is really where we know what's going on. This is our local market. We're the experts in it. If you have a friend or a family member or you're moving or something to another state, we have brokers in other states that are just like us that we can refer you to help you, that are the local expert in that market. So be it Arizona or Florida, Texas, Maryland, any of these other states where we have other things, because those, when people are relocating here, then now they'll send they refer them to us. So I just talked to a guy in Phoenix actually, where I was telling him about my buddy works at Nationwide, and he was like, yeah, people relocate back and forth, and he's actually a realtor in Phoenix too. And I was like, this is perfect, man. I was like, I'll introduce you to my buddy. If any of his friends he's out there, there you go. You're the local expert. Yeah, not me. I don't know. We're not licensed there anyway. So, we can still help, not directly, but we can put you in contact with a broker in another state that will be able to do for you the same things that we're doing here.
Yeah.
So
and
that's huge.
Be resourceful. I mean, that just having those options for people, so they can a one-stop shop, if you will.
And we don't get anything out of that. That's literally just us saying,
trying
hey,
to help.
listen, we know you, or you maybe you don't know us, but you've come to us for some advice through a former customer. Or, I don't know. It doesn't matter. And you're moving to wherever, we can put you in contact with somebody out there, which is huge, because that way you're getting the same great service, you're getting the same great access to wholesale rates and whatever. It can literally save you thousands of dollars to do that. So definitely keep that in mind.
Yeah, those little details, those little things are way bigger than and especially if somebody's in a loan process or they're looking for that help, and just not knowing where to go. But those little things are magnified, and they're a bigger deal when you need it. It may not sound like a big deal today, but tomorrow when you need it, and all of a sudden it's a much bigger deal. Like, well, what do I do? Well, hey, you know the person to call. That's even us again being wholesale. It goes back. Homeowners insurance. I mean, how people don't know, and we get no benefit out of saying, well, that homeowners insurance is too expensive. Everybody else will just take it like, this is what it is. Okay, get the loan closed. They're not going to take that extra time to help make sure.
Hey, at least double check.
Hey, this is way more expensive than what you should be paying. They're just going to move along with the process and moving on to that next person.
Right.
That affects the payment. I mean, I can't tell you how many people I've helped save $30, $40, $50, even $100 a month on their payment just by exposing what homeowners insurance is.
Atrocious.
I get nothing out of that.
That's just, hey, listen, we're just trying to help you. Like, and a lot of times it's going to, an insurance broker or an agent that has access to several different lines or something like that. So they're kind of like us, but they're on the insurance side, right? So they can shop around, they can look and see what's going on. And sometimes it's like, hey, okay, this premium's higher, but I have extra coverage for, A, B, C, D. Okay, that's fine. That's totally, but you need to at least know, hey, this is what, because we've seen some pretty big, and at the same time, we've also had some validated. They said, hey, you know what, this is the premium, this is because of, claims or whatever. Okay, well, now at least there's way more certainty with that. And again, we're talking about your money that you're spending every month. That's what we're trying to help save and make go further for you. And again, there's so many ways to look at it and so many ideas to share and options to share. Get you another Starbucks.
Yeah.
Anyways.
No doubt.
All right.
Cool.
We appreciate everybody tuning in today.
Yeah. Everybody have a great week.
We'll see you.
See you.